is Tuesday, what day is it? Tuesday the 13th of July. I'll also be doing a price action journal for Monday as well, as it was the Euro final, and had a few days on the Sunday, so I wasn't active on the charts. I wasn't very active in general, so this is a breakdown of both days. So, starting on GJ, as I'm already on it, we had the Open and Asian session through Sunday and Monday morning, typically low volume, and then seems like London Open gave a bit of volatility and a push to the downside. That's today. So yeah, London Open at first sparked up to the upside, grabbed liquidity from these highs here, failure to triple top scenario, and a strong push down, decent volume for a Monday. We had a reaction at 152,800, which was instantly rejected. You could have took continued sells here. Quite messy price action though. I think price did. I've got it marked up for Tuesday, but yeah, quite messy price action there. If you would have left stops at break even though, he wouldn't have been tagged out. Could have eventually brought it down to the key level. Very messy trade though, in terms of slow volume. Double top scenario at 152,800 for pullback sells, which do hit the key level, and then pushes down back to 152. It's nice to see the good reactions to 152,500 as well. So we have price consolidating during 10 o'clock and 1 o'clock open. We get that push down to the key level, 152,500, and then we get a push to the upside. We get a candle body closure above here, 30-minute candle actually, bottom wick, and then we have a top wick obviously formed, and it closes above these highs here. Got a 10 pip stop there. Then you could bank your first entry, first TP stop area here. Stops at break even, small pullback, continuation buys. Nice volume really that. Can't ask for much more though. Consecutive bullish candles, choppy, slow pullbacks, clear control by the bulls at this point. These 3 solid bull candles as well would have you make me confident in holding the trades, and just basically seeing that there's a low amount of sell side pressure, and you are on the right side of the trade at this point. Another consecutive 3 candles in a row there. Much stronger, bigger bullish candles. So yeah, it would a nice trade that really. You could maybe even, if you're being quite aggressive, could have had a tighter stop, because technically, if price was to close back and below these highs, it's just broke out on the key level, I wouldn't be confident holding the trade anyway. So you could probably have maybe a 7-8 pip stop loss, and then if you was to get candle bodies engulfing this bullish candle here, which closes above the key level, you could just close it out for half the loss, about 4 pips, unless you was unlucky and it just completely engulfed it. But if price was to close below this high, it just breached, then I wouldn't be confident holding anywhere. So if you was to do that, you'd get your 2 to 1 there as well. You get a 2 to 1 trade for the first TP profit, and then just short of a 5 to 1 on the second one, TP area. And then we seem to consolidate in between 153, 153, 200. Asian gives another continued push up, fails to close above 153, 500. But again, we have a break and retest of 153, 200 before it pushes up inevitably. Decent price action for Asian. You would have had to hold, you'd have to hold your trade and watch it go back to pretty much break even though to get close to your TP zone. So not ideal price action, but it's interesting to see how we do retest the psychological level perfectly, and that is the best entry point before the push up. Double top and slower volume candles at the highs, and then we get that corrective structure and move to the downside. Breaks. Then today we had that sell push down, Tuesday. So let's go back to the higher time frames now. So what I do like as well, so I was too zoomed in on 1 minute price action and just looking at potential entry points, but I would only be looking at these psychological levels once we reach them, and I would be on the higher time frames before it. So it's good to see on Monday's price action now we have these candle body, we have a sensitive price area and multiple candle body closures supporting this area of support here. That's why I've got it marked out. It respects it again today before pushing up, but we have a couple of spikes down below 152, 500, but failures to trade below it on intraday and time frames, such as the 1 hour. Also, as well, you see both wick rejections are pretty much identical price points of just around 152, 400, which is again interesting to see. But we are now in a range. But it's decent. There's decent pips between it. There's literally 120 pip range. So I'm not sure how I feel about trading in the middle of it. I would ideally like to see maybe either a double bottom scenario here now. Further rejections of 152, 800. I would like to again see intraday candles such as the 1 hour holding support for me to take scalp buys up to 152, 800. So that was 152, 500 to 800, and then potentially further. Or we could start consolidating in between above 152, 800 where we are now. But if we are taking scalp buys up to the top of the range, you've got to be aware of areas of resistance here. We could be potentially breaking and retesting and having just printing bearish market structure. However, we did fail to print new lows, so that is a bullish indication. So I'm going to look at any potential news events for tomorrow. So there's no news events for the pound. Fed Powell testifies. That'll be at 5 p.m. But as we know, that could, yeah, if anything's said which is negative for the US dollar, it could strengthen safe haven currencies and commodities such as JPY, Swiss franc, and commodities such as gold. So that's something to bear in mind at 5 p.m. It's not usually my trading time anywhere, but we also have further PMI results on a monthly basis, which is more of a macro view, economic view. So we'll see if that could affect gold like it did today with the PMI results today, which sort of just showed indecisive price action, which we'll get into in a minute. But yeah, in terms of trades now on GJ, yeah, it's a pretty of a sticky point for me really, because we are still in this corrective structure as we printed new lows. We haven't got to this high yet and traded above the high which printed this new low yet. So for me, we are still in a corrective phase, but we have been pushing to the upside and finding support above previous lows. I would like to see us break above 153,200 and 153,500, sorry, and start forming new highs, and eventually for higher time frame bullish bias completely, I would like to see us trade above this high at 154,400, but bearing in mind we would be there or thereabouts close to this bearish trend line. So yeah, it's quite indecisive JPY at the minute. Obviously, at higher time frames we're still bullish. Maybe this was a liquidity grab to the downside, spiking below these lows, but we did fail to close below this weekly support level, and still obviously bullish on the higher time frames. But we could potentially fill this wick to the downside, this bearish wick to the downside. However, it was a strong rejection. So yeah, quite indecisive really. On gold, it seems like I'm gonna go on to a different GJ chart. It's got no mess on it. So yeah, we are at discounted levels now on GJ. We have tapped into. Again, I would like to see price trade below 148,800 and 149 for higher time frame sell bias. We still are in this corrective phase. So yeah, I think it's in terms of buys. On the 4 hour, it does look fairly clean. We've had equal lows respected, and we could start riding buys to the top of this range here. But we have to bear in mind that there could be a potential. There is support at 153 as well, so price may struggle to push to the upside at 153 and sort of create that head and shoulders pattern, a typical head and shoulders pattern there as well. So yeah, I'll be willing to take scalps above psychological levels, buy scalps, but I would like to see break and retest scenarios going after indecisive price action and range we're in, and we was trading in the middle of the range. Also, these areas of price to be looked out for. For potential rejections above 153. In terms of sells, if we was to hover, if he was to show bullish exhaustion candles such as these, weaker bullish candles, and then we was to reject these highs here, and then come back below 153 and find resistance at the psychological level, there could be potential. There could be potential sell scalps to take back to the bottom of the range. So keep an eye out for that. Battery's very low. Right, I'm going to move on to gold. Right, so we're still in that no trade zone for me. We had a couple of spikes to the upside. I do like how the 4 hour candle respected 18002 before pushing up to the next key level, 182,500, 1803, sorry, it respected in terms of candle body closures just on the level, on and around the level. And then I do like how we pushed up to the next key level, but as you can see we're clearly struggling to hold above it and reach 1820. In terms of potential trades, I will only be taking trades above 1812500, and I would also like to see intraday candle closures above it. However, like I said in my previous webinar, I did want to see what at least hourly closes above it, which we did get, and I did take a small loss. I think it was 0.25% loss. I did take a small loss above this range. I did get out, stayed emotionally neutral, and I got out of the trade. So basically I entered here off this candle body closure here, just above the key level, pushed into profits, and then we had a strong bearish candle which engulfed the 3 candles which closed just above the key level, and I just closed out. Took 0.25% loss, completely fine with that. The idea I wanted price to push up to this sensitive price area in lower time frames, and if it did, and when we closed above it, I'll potentially ride it out to the next key level, 1820, or I would scale out, take some sort of profit at the high if I did see forms of rejection, or at least say a break even. That didn't materialise, it rejected. Started consolidating around these areas, I would have been stopped out. So I did well getting out the trade. Also as well, just something to bear in mind for future trades, the new 5-minute candle opened and it pushed to the upside and back into profits, but you see how the 5-minute fails to close these highs, it fails to close above these highs there, and that was just simply making the top wick before it's continued push down. Like I said, it does consolidate eventually, and then eventually push down to the downside. But yeah, that's just ranging around the highs of the range at the minute. So it is looking still fairly bullish. Maybe Fed Power will give that fundamental catalyst to push out of the range tomorrow. I wouldn't be surprised if it did. But obviously, once we do get out of that range, there'll be strong moves to either the upside or downside. My bias is to the upside because I feel that we have got deeper discounted levels to be hit, and better prices for investors to get back into gold sells for the monthly and quarterly potential downside moves. I feel that they may use some news events to get price to these discounted levels and continue this downside corrective structure on gold. So yeah, we're only getting tiny bullish, small bullish weekly candles. It's just looking quite corrective, isn't it? Compared to this weekly downside move. So you would expect further downside on gold, really. So in terms of trade ideas, still same trade ideas, still valid. So trade zone, looking for buys above it. Buys above 182,500. Bearing in mind this sensitive price area to the left, where price wicked off today and rejected off cleanly. Oh yeah. So we'll break down the CPI results as well from today. Also, it's PMI next tomorrow. Yeah, PMI monthly. It's CPI. So yeah, the consumer price index today, which obviously monitors for inflation and prices and inflation. So the results was inflation was higher on the consumer price index, quite a big jump in comparison to previous results. In fact, yeah, May was quite a big jump on May as well, 0.6%. So this sort of just made the US dollar just whipsaw really. I think it did give DXY strength. It did pull back slightly, but it continued going up. But in terms of gold, it just whipsawed. So mixed results because we did get higher inflation, but because of the higher inflation talks, it brought about speculation of potential early rate hikes, which increases in inflation does potentially mean, well, that gives reasons for central banks and Federal Reserve to increase interest rates to combat against inflation. So the increase in inflation gave the markets and investors speculation that there could be earlier rate hikes than expected. So that gave USD some short-term strength. We had that push down, and then we retraced up. This is about 130 pip move plus, I think. Oh yeah, 120, 130 pip move. So it was a liquidity grab, same as previous CPI result. We had a liquidity grab first to the downside, trapped retailing, gathered liquidity from these lows here, trapped retailers in as well. He would be selling gold because of the high volatility to the downside, and then the move's completely corrected. We trade above the range and then we failed to hold above it, and then crash back down into the middle of the range. So yeah, just a whipsaw and quite indecisive price action on gold there. So yeah, I need to do a spreadsheet as well. Start recording the CPI, all high risk news events, and start tracking them on a spreadsheet, and then looking at the similarities and differences, and seeing which results, and see how they affect currencies see how they differ between different results, either whether they be bad results or good results, see if they affect the markets, if they don't affect them, and just try and look out for clues and patterns occurring throughout the results, which I can easily backtest as well with all the dates it gives and all these news events. I can just backtest the actual dates on intraday time frames. So yeah, that's pretty much everything. Trade ideas haven't changed on gold, and GJ's a little bit confusing for me at the minute, but safest buys for me are above these highs which printed these lows, and safer sells I could potentially see as I'll be taking sells below 153 if we react to these highs here and then form some support underneath 153. I would be willing to take sells down to these lows, take chunk of my position, and then potentially, if we did break these lows, I could have a swing trade scenario where I could target these lows here. But yeah, quite indecisive on GJ at the minute. But that's everything.